Ladies and gentlemen, good day and welcome to the Q4 FY25 earnings conference call of Modi Naturals Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akshay Modi, Joint Managing Director. Thank you, and over to you, sir.
Thank you. Good morning, ladies and gentlemen. Thank you for joining us for the Modi Naturals Limited Q4 and FY25 earnings conference call. I trust you have had an opportunity to review our financial results and investor presentation, both available on the company's website and on stock exchanges. SGA, our investor relations advisor, is joining me on this call. It gives me immense pleasure to share that we have been sowing seeds of growth over the last few years, and FY25, the year in which the company completed 50 years since inception, has seen them bear fruit. At Modi Naturals Limited, we have not only fully revived our business operations, but have also marked FY25 as a landmark year of reversal, resurgence, and renewed growth. At the start of the year, we set ambitious targets for ourselves across revenue, EBITDA, and PAT. We are pleased to announce that we have met our guidance. This outstanding performance is a testimony to our team's agility, our relentless focus on operational efficiency, and a favorable demand environment across all our divisions. These factors have collectively driven substantial growth and resilience across the organization. The FMCG sector remains the foundation of the Indian economy, deeply ingrained in the everyday lives of millions. The industry is undergoing rapid transformation, driven by shifting consumer habits, growing health consciousness, and increased demand for transparency. Today's consumers are more informed than ever. They study product labels, evaluate ingredients, and prefer products that align with their values and wellness goals. This evolving landscape has presented us with an opportunity to strategically position ourselves at the intersection of quality, transparency, and health. Our flagship brand, Olive, represents this transformation. Designed for the health-conscious consumer, olive oils offer tangible benefits, including heart health characteristics and superior cooking performance. This alignment with consumer expectations has allowed us to build a strong brand presence and a loyal customer base. Our consumer division remains a strong pillar of growth. Our flagship brand, Olive, delivered exceptional performance. While input cost volatility and macroeconomic challenges did pose headwinds, our strategic foresight and operational discipline enabled us to deliver consistent value and strong growth. Our non-oil portfolio also saw significant progress. We have witnessed strong traction in our product acceptance and consistent volume growth across multiple categories. This performance underscores the effectiveness of our diversification strategy and reinforces our commitment to expanding beyond the oil business. One key highlight in FY25 was the strategic investment in marketing and brand building. Recognizing the power of consumer engagement, we significantly enhanced our marketing spend and onboarded Karishma Kapoor as our brand ambassador. Her credibility and connection with our target demographic have helped amplify our brand messaging and deepen consumer resonance across all channels. We've also made significant progress in expanding our distribution footprint. Along with strengthening our traditional general trade relationships, we expanded meaningfully into modern trade while establishing partnerships with leading e-commerce and quick commerce platforms. These initiatives have significantly improved product accessibility, ensuring consumers can conveniently find our products across multiple touchpoints. Coming to the bulk division. The last 2 years were particularly challenging due to the government-imposed reductions in oil prices and subsequent inventory corrections. However, these challenges are now behind us. We are witnessing a strong revival in business activity supported by softening commodity prices, improved monsoon, fresh crop inflows, and favorable macroeconomic trends. Stabilization in oil prices and strategic operational initiatives have led to a marked improvement in EBITDA, paving the way for sustainable profitability in this division. Turning to our newest and most promising vertical, ethanol division. Our ethanol division continues to be a key pillar of our long-term growth strategy and is fully aligned with the Government of India's vision for a cleaner, greener, and more sustainable energy future. The recent policy to allocate 52 lakh tons of rice for ethanol production, backed by government subsidies and aggressive ethanol blending targets, offers long-term visibility and ensures healthy operating margins for the industry. We are proud to contribute meaningfully to India's energy transition through this initiative. In November 23, we successfully commissioned the first phase of our ethanol plant with an initial capacity of 130 KL per day. We faced initial challenges during the plant's operational rollout, and we swiftly addressed these issues and steadily optimized performance. Today, the plant is running at optimal capacity. We are well positioned for growth. From the outset, we had taken a strategic decision to establish our distillery infrastructure with scalability in mind, enabling us to support future expansions. We are now progressing rapidly with the second phase of our ethanol facility, which is on track to commence by Q3 FY26. This expansion will add 180 KL per day to our current capacity, bringing our total ethanol production capacity to 310 KL per day. This marks a significant milestone in our journey. Let me move to the financial section now. Coming to our consolidated financial performance, Q4 FY25 performance highlights. Revenue from operations is up by 58.5% to 189.9 crore year-on-year. EBITDA for the quarter grew by 189% to rupees 16.1 crore year-on-year. EBITDA margins stood at 8.5%. PAT grew by 550% to 8.2 crore year-on-year. FY25 performance highlights. Revenue from operations is up by 65.8% to 662.9 crore year-on-year. EBITDA for the quarter grew by 517% to 56 crore. EBITDA margins stood at 8.4%. PAT became positive to rupees 31 crore as compared to a loss of rupees 1.4 crore in FY24. Cash flow from operations stood at 48.8 crores versus negative cash flow of 6.8 crore in FY24. ROCE stood at 18.3% compared to 2.1% in FY24. ROE stood at 25.5%. Debt to equity stood at 1.22 in FY25 versus 1.87 in FY24. Our net working capital days stood at 66 days in March 25 as compared to 111 days in March 24. Coming to our divisional performance, Consumer Division. Revenue for Q4 FY25 stood at 48.5 crore compared to rupees 42.1 crore in Q4 FY24. And FY25 stood at 179.4 crore compared to rupees 169.1 crore in FY24. EBITDA for Q4 FY25 stood at rupees 3 crore as compared to rupees 4.9 crore in Q4 FY24, and for FY25 stood at rupees 15.1 crore as compared to rupees 18 crore in FY24. Increase in ad spends in Q3 and Q4 FY25 as planned had an impact on EBITDA. Further, we are scaling up the pasta portfolio under Olive Kitchen brand with celebrity endorsement and targeted advertising. Overall, the demand is improving, driven by expanded distribution, innovation, and new product launches in our food basket. Bulk Division. In Q4 FY25, our revenue stood at rupees 56.1 crore as compared to rupees 42.7 crore in Q4 FY24, and FY25 stood at rupees 158.6 crore as compared to rupees 188.6 crore in FY24. EBITDA stood at rupees 90 lakhs in Q4 FY24 as compared to loss of rupees 2.3 crore in Q4 FY24. And for FY25, EBITDA stood at rupees 1.7 crore as compared to loss of rupees 9.3 crore in FY24. Turnaround in divisional performance in FY25 driven by improved demand and stabilization of commodity prices following inventory losses in FY24 due to declining oil prices. Ethanol Division. In Q4 FY25, our revenue stood at rupees 85.3 crore and for FY25 stood at rupees 324.9 crore. EBITDA for Q4 FY25 stood at rupees 13 crore and for FY25 stood at rupees 42.7 crore. The ethanol distillery is currently operating at its optimum capacity. We received an order of rupees 300 crore for 41,000 KL from various OMCs through to October 25. Division-wise ROCE for FY25 is as follows. The Consumer Branded Division, 31%, Bulk Oil Division, 1.2%, and Ethanol Division, 18.8%, and on a consolidated basis, 18.3%. FY25, the year in which our company turned 50, will be remembered as a turning point in the history of Modi Naturals Limited. The year in which we overcame adversity, strengthened our foundations, and unlocked new avenues of growth. We are entering FY26 with renewed confidence, sharper focus, and greater momentum than ever before. As we look forward, we are confident in our ability to sustain and build on the momentum of FY25. Our vision for FY26 on a consolidated basis is as follows. Revenue expected to be in the range of 850 to 880 crore, driven by increased volume across both oil and non-oil portfolios and higher ethanol capacity utilization. EBITDA expected to be in the range of rupees 80 to 85 crore, supported by improved product mix, operational efficiencies, and higher margin contributions. And PAT expected to be in the range of 42 to 48 crores, aided by cost rationalization, margin expansion, and improved working capital management. With this, now we can open the floor for questions. Thank you.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Guneet Singh from Counter PMS. Please go ahead.
Sir, what kind of utilization is our current ethanol plant running at? And before the commencement of the new ethanol plant, the expansion, what would be the drivers of growth in Q1 and Q2 of FY26?
So, as far as the capacity utilization goes, we're running at full capacity utilization currently. And with the expansion coming in, we're expecting higher capacities later in the year. And we've given the annual guidance. We'll come back to you with the quarterly guidance as well. In the consumer division, the run rate of growth has increased. So if you see over the quarters, we have grown Q1 at 3%, Q2 at almost nil, Q3 it started ramping up to 7.7, and Q4 at 15.2% growth. And Q1 we are expecting further growth increase. So as we are increasing our ad spends and focusing on the consumer division, the growth is ramping up.
All right, sir, got it. But, I mean, we should be expected to remain in the similar quarterly run rate as Q4 FY25, right? Because the new capacity will come in Q3. So what are your thoughts about that?
Ethanol-wise, yes, but we are expecting higher revenue, like I said, in the consumer division, and year-on-year also in the bulk division. So from that point of view, year-on-year basis, you'll see a good growth.
All right, sir. And how long will it take for us to ramp up the new capacity?
Like I said, we are expecting to commission it by the end of Q2 or maybe early Q3.
No, how long are we expected to ramp it up to 100% or optimal utilization? I mean, what kind of utilization should we expect for the first 6 months, for example?
It's safe to assume maybe, let's say, 50-60% in Q3 and then closer to 90% in Q4. I think it's just off-the-cuff calculation, but we will see how it pans out.
All right, so got it. Thank you.
Capacity only. The current capacity continues to run at 100%.
All right, so got it. Thank you very much.
Thank you. A reminder to all participants, you may press star and one to ask a question. The next question comes from the line of Rohit Mehra from SK Securities. Please go ahead.
Hello?
Please go ahead, Rohit. Yeah, and just speak a little louder. Thank you.
Okay. Ajay, thank you for the opportunity. Congratulations on achieving the guidance. And I just wanted to understand that we have outperformed in ethanol division in terms of revenue. However, we have fallen back in bulk and other divisions. What were the reasons behind it?
So, in the bulk division, we have not fallen back. In fact, we have recovered from FY24, and FY25 it marks a recovery in the bulk division. And consumer division as well, on a year-on-year basis, we've grown at about 6%, but this was as planned in the first 1 or 2 quarters. We had scaled back on our ad spends, and then we increased them Q3 and Q4 onwards, and the growth has come back, and that was always the plan.
Okay, so got it. And my second question is, how much ROC are we generating in branded and ethanol divisions?
Yeah. So, ethanol ROCE is 18.8%, and branded is 31% for FY25.
Oh. Okay, sir. Thank you. That's it from my side, and all the best.
Thank you.
Participants, please press star and 1 to ask a question. The next question comes from the line of Rajvi from Bright Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. I just have 2-3 questions. The first one is, in terms of the branded division, how much revenue did you do from Tier 1 and Tier 2 cities?
We have not done the tier-wise breakup. We'll come back to you with that. We can give you a region-wise split if you want. So we have North leading the way at 46%, followed by South at 19%, West at 17%, and East at 16%.
Okay, sir. I just have one more question. Are we planning to expand ethanol division beyond 210 KLPD? And if yes, do we have sufficient land bank to do the same? Also, do we have any thoughts on diversifying the business to another state?
So we are expanding our capacity from 130 KL to 310 KL, and we have enough land bank, in fact more. And
Okay.
The layout and infrastructure was always planned to expand capacity, so the expansion is taking place in the same premises and the same layout. And we've already funded the equity part from internal accruals, and we've
Okay.
secured an 88 crore long-term debt from HDFC Bank, which has already been taken up.
Okay. And do we have thoughts to diversify the business to another state?
Not at present.
Okay, sir. That was really helpful. Thank you.
Participants, please press star and 1 to ask a question. The next question comes from the line of Shaurya Punyani from Arjav Partners. Please go ahead.
Hi, am I audible?
Yes.
Sir, regarding your CapEx, so how was that CapEx funded, both phases?
So as I mentioned, so in the first phase, the equity part was funded through internal accruals of Modi Naturals, which invested into a subsidiary, which is Modi Biotech for this division. And in the first phase, we got debt of about 105 crores for CapEx. And in the second phase, again, the equity part is being funded through internal accruals, and we secured an 88 crore long-term debt, which has already been disbursed.
88 crores, okay. And sir, regarding when the new capacity kicks in later this year, so can we expect like a similar growth in next year also, FY27?
Yes, I mean, you can do the calculations. So we're expecting an asset turn of about 3.4x after expansion from the full total capex of the ethanol division, plus the growth from the other two divisions.
Okay, sir, that helps. Thank you.
Thank you. The next question comes from the line of Vaishnavi from Scientific Investing. Please go ahead.
Hello. So I have a couple of questions. So what are the sustainable margins in each of the business segments?
So the bulk division, I would refrain from commenting as it has a volatile component. The branded division, we started off FY25 with about a 15% EBITDA, and then we came down to an average of about 8.5% for the year. And as that was the decision taken by the management to spend aggressively on advertising, invest rather. And I think in that same range, we intend to continue this financial year at between 8.5% and 9%. And I've always maintained that given where we are and the way we are operating our ethanol division, we can maintain between 12 and 15% EBITDA. And there's quarterly seasonality on the raw material prices as it's agri-based. So that is the range that we expect through the year.
Okay. So the next question is in the FMCG segment. So FMCG growth has been challenging in general for the industry and us as well. So how hopeful are you on the FMCG growth, and what percentage will come from distribution and geographical expansion, or from new products, or from price hike?
So we're absolutely confident of delivering growth on the consumer division, because the subcategories that we operate in, not only we have completely differentiated product offerings, but we are also leading the categories, and we have the highest share of voice in marketing. And as far as distribution is concerned, we have the width of distribution across the country and a couple of neighboring countries. Now we're looking at depth of distribution as well as product expansion. Some of the product categories that we entered into, we are planning very aggressive growth. For example, the pasta segment. I think growth will come from a 360-degree approach. There will be distribution expansion across categories. There will be core portfolio growth as well as new product development.
Okay. Thank you.
Thank you.
A reminder to all participants, please press star and 1 to ask a question. The next question comes from the line of Praveen Sharma, an individual investor. Please go ahead.
Hello. Am I audible?
Please go ahead. Yes.
Yeah. Hello, Akshay. I think, first of all, a big congratulations for the team for delivering the numbers and such an excellent result, and also, very promising guidance for the next coming year. And I'm sure you guys will, like this, be able to meet and exceed guidance for the next year. So big congratulations team for that, and big applause. My first question, I have a couple of questions. The first one is, given operations, on one hand we have ethanol division, which requires, lightning with government, inventory operations and things like that. And other hand, we have FMCG. We need to, as you said, that we are planning to get deeper into distribution and product innovation and marketing and brand ambassador and things like that. So how is the team structured? Means, of course, you are at the top and, you will be managing. But just for my understanding, especially from consumer, how the things are structured, because people need, as far as the sales guys need, they've been constant pull around to deliver their numbers. So I just for my understanding, below you, how is the team structured?
So good question. So in the consumer division, we are fully professionally run, and we have a typical hierarchy like an FMCG company, where there's a chief marketing officer, there are vertical-wise sales heads, for example, organized retail and e-commerce, as well as traditional retail and institutional sales. And then there are support functions, there's supply chain, etc. So there's complete professionally driven teams in consumer division. And in the ethanol division, we have a head of the entire division, and under him the full hierarchy is there. So I don't see any leadership-wise challenges. We have freed up significant bandwidth to focus on both divisions.
And you have separate sales head for e-commerce, MT and GT, and the region-wide sales head also. Like the distribution is very wide and deep, the sales team.
Yeah, absolutely. So it's a typical FMCG structure where we have region heads, area heads, state-wise heads for GT. And in organized retail, we have key account managers for every account, like Amazon, Flipkart, Blinkit, Zepto, etc. And they're based in the cities and headquarters of those accounts. So that's how we function.
Okay. Now my second question is, regarding the, reach of the products, especially the Pipo, zinc, and, pasta, of course, and oil is available on Blinkit and other e-commerce channel, but other product available, as of now, just wanted to know what is the issue there, Big Basket, Blinkit, Zepto, the Pipo range and the zinc range.
So I think until FY24, you would have found only our oil products in some of the leading e-commerce players. In FY25, and then of course this quarter, we have struck deals with all the Q-commerce partners for pasta, and increasingly you see our pasta distribution scale up in e-commerce as well as GT. And there's a constant endeavor to add new products. So once we scale up pasta, we will be adding these other products as well, like Pipo, because we've got our foot in the door with the food category, and relationships are the same now. So we'll be expanding our even food product distribution over the next few quarters.
Great. The third question is basically on the, this high value protein, byproduct of ethanol division. Do we see any opportunities in the export market for the same, and, or it is mostly a domestic, because animal feed is now a big thing, big industry in India?
Yeah, absolutely. So we've done some value addition there. We've moved into a higher protein byproduct, which we've developed internally. And we've partnered with some of the leading, not only poultry, but also aqua feed manufacturers, some of the leading players, and we are supplying to them. And we're also exploring export markets. So for export markets, there's a slightly longer, especially for developed markets, there's a longer lead time because you have to get the certifications, etc. So something has been done, and we are currently, the certifications are ongoing, and we hope to start exports soon.
Great, because with the FTA with Australia and New Zealand and things like that, things should start moving because they are the big, such products. Last question is on we have.
Your voice is breaking up.
Sure. Yeah. I'm sorry. Am I audible now?
Yes, please.
Hello? Yeah. On the advertisement spending, do we intend to increase it, and how much typically percentage of the top line we plan to invest in advertisements, and brand building this year?
So we have two types of advertising. There's above the line and below the line. And while below the line our advertising remains constant, we had scaled back our above the line advertising for the last 2 financial years. And in FY25, we have increased it by almost 30%, and we intend to double it in FY26. So above the line, we had spent, I think, close to about 4%, which has gone up to almost 7% in FY25, and we intend to maintain that or increase that further in FY26.
Okay, great.
And only advertising, not promotions.
Okay, promotion is separate. Okay, I got it. Okay, thank you. All the best and good wishes.
Thanks.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question comes from the line of Anukul from Inved Research. Please go ahead.
Yeah, hi, Akshay. Wanted to know, post expansion and given your guidance, what is the incremental revenue you see from the ethanol division?
Sure. So our total capex will go up to about 250 crores, and we expect about a 3.4x asset turn after expansion once we're fully operational.
And incremental EBITDA margins, EBITDA numbers do you see from the ethanol division?
Yeah. So like I said, there's a range, and there's a quarterly seasonality in EBITDA and ethanol due to agri prices. So between 12 and 15%. So even if you see last financial year, FY25, we started off with about 12%, and Q4 we achieved over 14% EBITDA in ethanol.
Okay. And one more question, you have been delivering solid sets in the ethanol division. So do you see, demerging the business, and creating value in the ethanol division?
So we're aware of all the options, but there are no plans at the moment, and we'll come back if it comes to it.
All right. Yeah. Thank you, sir.
Thanks.
Participants, please press star and 1 to ask a question. The next question comes from the line of Manav Jain from JN Investment. Please go ahead.
Hello, sir. Am I audible?
Yes, please go ahead.
Yeah. Thank you for the opportunity. I had a couple of questions. So my first question is, how did we manage to improve the net working capital, which is currently at 66 days?
So the net working capital is basically comes from majorly two. The difference comes from two divisions. In the bulk oil business, we have had strict management practices where we've reduced our days massively by being very prudent. And on the ethanol side, there is some amount of credit available on raw material purchase. And again, since we have the orders of ethanol for the entire year, we are almost working at nil inventory, maybe 1 day inventory at max of finished products.
Okay, sir. Yes. And my second question is, as you've given the guidance of 850 to 880 crores, could you please provide me with a breakdown into three segments?
We haven't given that yet. We'll come back with those numbers. Since the year has just started, and maybe in the next quarter or two, we'll be giving the breakup.
Sure, sir. Thank you. And all the best.
Thank you.
Participants, please press star and 1 to ask a question. The next question comes from the line of Suvankar Malik from SKS Capital. Please go ahead.
Am I audible?
Please be a little louder, Suvankar. Thank you.
Hello, am I audible?
Your voice is not clear. Could you use the handset mode, please?
Yeah, I am using handset mode. Am I audible? Can you hear me?
No, your voice is not clear. Could you please move to an area where there's better network coverage?
Yeah. Now is it okay?
Yes, please. Go ahead.
Yeah. So, thank you for the opportunity. So if I go through your website, right, there are lots of brands I can see, but you have given only two segments. One is bulk and one is branded, right? So can you just give me the breakup, right? Which brand come under which segment?
So our entire consumer division is housed as one division, which is our oil brands as well as food. And only the bulk business is clubbed under the bulk division.
Oh, okay. Yeah, understood. Thank you.
A reminder to all participants, please press star and 1 to ask a question. The next question comes from the line of Harsh from DAM Capital. Please go ahead.
Yeah, hi. Hello. Am I audible?
Yes, please go ahead, Harsh.
Yeah. Hi. Thanks for the opportunity and congrats on great fiscal. So just a couple of questions.
Thank you.
And on ethanol specifically. So firstly, with maize prices softening meaningfully and expected to further...
Sorry, your voice is a bit muffled. Could you please speak a bit louder?
Yeah, hi. So just two questions on ethanol. So firstly, with maize prices softening meaningfully and expected to ease further post the Bihar harvest. So how should we think about the ethanol spreads going forward? I mean, industry level EBITDA per liter had compressed sharply from 7 to 8 to near break-even levels over the last 2-3 years. So are we now at the beginning of, say, margin recovery cycle?
Yes, I think that should be the case. I think if you see the year-wise seasonality, Q4 and Q1 will traditionally be better margin quarters as compared to Q2, and then Q3 will be a recovery over Q2, getting better in Q4 as a massive paddy harvest comes through, and then, of course, Q1 is a big maize harvest. So Q4 and Q1 will traditionally be the best quarters for grain ethanol.
Yeah. So what would be the procurement price at this point of time? I mean, how has it moved over the last 2-3 months? I mean, if you could just give a sense of it.
So first, the prices came down by roughly, let's say, 10% when the paddy crop came. And then when the FCI rice policy came that I mentioned in my opening remarks, the prices softened by another 8 to 10%. So broadly, that is the number. Okay. And, secondly, on industry front, so, with India nearing the 20% ethanol blending threshold, so how is the industry calibrating capacity addition beyond this point? There's some early talk about a potential move towards 25% blending by 2030. But, what would be your assessment of how the demand landscape evolves from here? So in the first half of the year, the blending percentage always seems high, because the sugar-based ethanol is also coming in. And in the latter half of the year, that number drops sharply. So for example, last year we were averaging 17-18% in the first 5 months, and by the end of the year, we blended only 14.6% annually. So this year too, we are at about 19.8% in the first 5 months, and I think in the second half it will drop sharply. So on an annualized basis, we are still not reaching 20%. So there will be some issues of the first few months of high ethanol supply, and with petrol consumption growing at about 6 to 7% nationally on an annual basis, plus if the blending is increased from 20 to let's say 22 and then 25 and 30%, so there's still headroom for growth over the next few years.
But do you see the blending percent to increase say to 20 to 25, or India adopting flexible fuel policy?
So from the government side and the industry side, all the efforts are on, and I would not like to speculate on what the policy is going to be, but definitely all the efforts are on from all aspects. Increase blending, look at the technical aspect of that, whether the cars can take it. Second is encourage flex fuel. I think flex hybrid is another really good solution for our country. As you can see, some of the states have already reduced road tax on hybrid vehicles, and flex hybrid might be the quick opportunity for our country to transition to a clean fuel.
So that's helpful. Thanks and congrats once again.
Thank you.
Thank you. A reminder to all participants, kindly press star and 1 to ask a question. The next question comes from the line of Karthik Nair from KN Broking. Please go ahead.
Hello, am I audible?
Yes.
Sir, are we planning to set up our own manufacturing setup for popcorn and other non-oil products?
So currently we are working on an asset-light model. Popcorn, we have a leased plant, and so it's manufactured under our name, but it's a leased facility where we do not need to do a capex. And for pasta, it's outright 3P model. So we're working on an asset-light model at the moment. Once the volumes are significant enough to warrant the capex in our own plant, we consider it then.
Okay, sir. Thank you.
Thank you.
Participants, please press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to the management for the closing remarks.
Thank you, everyone. I hope we have been able to answer all your questions satisfactorily. However, if you need any further clarifications or want to know more about the company, please contact SGA, our investor relations advisors. Thank you once again for taking the time to join us during this call today. Have a nice day.
Thank you, sir. Ladies and gentlemen, on behalf of Modi Natural Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.